There's a lot of worry right now. You know, our budget deficit reaching $1 trillion, big boost from last year. I mean, Howard Schultz has been already talking about that. One of the reasons and one of his pillars of his campaign, it sounds like, if he does decide to run, is that growing deficit. How worried should we all be about it?
I don't think it's our biggest problem. When we've got life expectancy diminishing for middle-class men, when we've got an opiate epidemic, when our major airports in New York City are crumbling, when Americans are paying 75 cents a gallon in extra automobile repair costs because of potholes in highways, when we are lagging increasingly in key areas of technology like artificial intelligence behind China because of underinvestment, we've got deficits. But the budget deficit, which we can fund for 30 years at 3% in a currency we print ourselves, that's not our biggest deficit as a country. And so the first priority needs to be fixing that investment deficit.
So when does the budget deficit actually become a concern for investors? I mean, isn't that the real risk here, that the bond vigilantes descend upon the U.S.?
It is a risk, but there are many risks. Another risk is that the economy will slide into recession. Another risk is that with very low interest rates, we'll have major asset bubbles. Another risk is that because of underinvestment in education, our kids won't be prepared to compete in the mid-21st century economy. You have to judge the priority of risks. And, you know, the market makes a judgment about that when it prices long-term instruments and when it prices short-term instruments. And the fact that markets are pricing long-term interest rates at such a low level is telling you what the current market judgment is. So would it be better to have less debt? Of course. Would it be better to have a smaller deficit? Yes. But if we find a way of generating extra revenue, which is a higher priority? Paying down a bond on which we're paying 2% interest, or investing in the future of the country, whether it's in infrastructure, whether it's in science, whether it's in our people? I just think we have many higher investments that pay much better returns than the 2-3% we can save by paying down debt.
Larry, when you talk about an investment deficit, that sounds like more spending and adding more to the current government deficit right now, unless you're doing a major overhaul of how the government operates in general. Is that what you're proposing?
Not exactly. I mean, I think what the article that Jason Furman and I wrote puts forward is that we should operate broadly on a pay-go basis. That is, if we want to do new things, we should figure out how to pay for them with higher taxes. And there's plenty of room to do that by adjusting aspects of the Trump tax cut that has done nada, for investment and economic growth. I mean, heck, business only wanted the rate cut to 25%, and it was cut more than business was originally asking for, down to 21%, and that's brought a lot of stock buybacks. That's brought some increase in dividends. There is no evidence of any kind that it has brought any increases in investment or employment of any significance. So there's things to do to correct the Trump tax cut. There's tax shelters to close. Why should it be that a billionaire is far less likely to be audited in America today than they were 10 years ago? That can't be a sensible allocation of resources.
All this deficit stuff has made me even more cynical, if that's possible, about our just political layout and situation here. I mean, it used to be we had people who seemed to care about deficits. There were deficit clocks, and we were stealing the future from the children. Now some of those very people are saying, all right, well, it turns out deficits don't matter. probably until the other party is holding the purse strings, and then they're going to matter again. So what is the reasonable ground to stake out? I guess you're getting at it partly in this paper on how to really talk about this in a way that's going to get something done that's good for the economy long term.
So first of all, the other party is in power right now, and I'm saying that the deficit isn't the top issue facing the country. So I'm not doing the partisan thing you were describing. Look, I think you have to make choices, and you have to make moderate choices. And the doctrine that Furman and I laid out is, I think, the right moderate doctrine. If you want to pay for things, if you want to do new things, you have to pay for them. But if new revenue comes in and you have to make a choice between investing that revenue and using it to pay down debt, if you've got investments that you can make that have a return far above 2 or 3%, you're better off making those investments. And that's the value judgment that I'm prepared to make. That is not a judgment that it wouldn't be better to have lower debt and lower deficits. It's just the country, like a family, has to make choices about what the most important priorities are. And if you're a family, it's good to pay down the mortgage. Really, it is. But it's probably more important to send your kid to college. And in the same way, as if you're a family, it's good to pay down the mortgage, but better to fix the leaky roof. I think we've got high priority areas where government has stepped back and it has to step forward. I mean, think about it. At a moment with all this concern with equity and fairness, why should we be opening up new tax shelters? And why should we be ramping down tax enforcement on the wealthiest people in the country? It doesn't make sense. And that's why there's room for us to do better. And I have to say, and I know this is not the view of many of your listeners, that when I hear very wealthy people, many of whom fly on their own plane, on their own private planes, start talking about how we need to find the courage to cut Social Security benefits, when the maximum Social Security benefit that anyone in the country receives is about $40,000 for an individual, that just seems a very misplaced kind of emphasis.
So this is all getting at the current debate right now for the hopefuls of 2020, Secretary Summers. Are you supportive of Senator Elizabeth Warren's wealth tax proposal that would only affect, I think, 75,000 households, taxing the uber rich with over 50 million in assets? Is that something? There are a lot
of things that should be looked at. I am for an increase in progressivity. The places I would look first are to closing shelters, broadening the base, increasing compliance, equalizing upwards the rates on capital income, fixing the estate tax loophole. Those things, I think, have very large potential. And I'd be looking to realize that potential before I moved into whole new areas of taxation. I've been trying to study the wealth tax since Senator Warren put it forward, and it's too early to reach definite conclusions. I think we do need to study pretty carefully why it is that most of the European countries, who usually are more progressive than we are and who had wealth taxes, have decided over the last 15 or 20 years to eliminate those wealth taxes, and why almost none of them get anything like the kinds of revenue that Senator Warren is aspiring to get. So those are questions that I think need to be looked at regarding the wealth tax.
Are you advising any of them, any of those Democratic hopefuls?
You know, I give advice, including on your show, to to people who are interested in thinking about economic policy.
Yeah.
But at this point, the only judgment that I've made is that the current administration has really been quite dysfunctional in its policies in the economic area, and that I hope an administration more committed to support for working with allies, more committed to a bubble-up economic philosophy rather than a trickle-down economic philosophy, and that's just believes in using the honest laws of arithmetic and thinking about economic questions. That's what I think the country needs going forward.